What's up, everyone? Let's talk about something really exciting happening in India right now. After a couple of years that felt a bit slow, like a tough task on a long journey, the venture capital scene is back with a bang. The numbers are telling a powerful story of recovery. In 2024, total private equity and venture capital investments bounced back, climbing by about 9% to reach a massive $43 billion. This isn't just a small jump. It's a clear signal that the game is changing once again. The energy, the deals, the ambition, it's all coming back stronger than ever before. India is solidifying its spot as a top destination for investors in the entire Asia-Pacific region. The real hero of this comeback story is the venture capital and growth investment space. These investments didn't just grow, they absolutely surged. We're talking about a 40% explosion, bringing the total to around $14 billion in 2024. This is a huge leap from the $9.8 billion we saw in 2023. It shows that investors are not just dipping their toes in the water, they are diving in headfirst. They see the potential in India's young, innovative companies and are ready to back them with serious cash. This renewed confidence is what fuels the entire startup ecosystem, giving founders the resources they need to build the next big thing. Now, let's look at the action on the ground. It's not just about the amount of money, it's also about how many deals are getting done. The number of VC deals shot up by an incredible 45% in 2024, going from 880 deals to 1,270. This means more startups are getting a chance to prove themselves and get the funding they need to scale up their operations. The momentum didn't stop there, it rolled right into 2025. In the second quarter alone, we saw another $3.5 billion invested across 355 deals. This steady flow of capital is the lifeblood of innovation, creating jobs and opportunities all across the country. This incredible growth has also led to the rise of new unicorns, startups valued at over $1 billion. While 2023 only gave us 2 new unicorns, 2024 saw that number more than double to 5. This is a huge milestone. It proves that India is not just a place for small-scale startups, but a breeding ground for world-class companies that can compete on a global stage. This resurgence is making India a critical player, now accounting for about 20% of all PE/VC investments in the Asia-Pacific region. The message is loud and clear. If you are a serious investor, you cannot afford to ignore India. So, where is all this money actually going? The trends show a clear shift in what investors are getting excited about. The biggest winner in 2024 was consumer technology. This sector became the largest destination for VC funding, with investments nearly doubling to around $6 billion. Think about everything from the apps on your phone to the services that make your life easier. A major theme within this space was quick commerce, the super-fast delivery of groceries and other goods. Investors are loving these businesses because they are showing a real, believable path to making a profit, which is a big deal in the startup world. Another massive trend that no one can ignore is artificial intelligence, or AI. It's the new frontier, and investors are all in. A staggering 74% of VCs are now making AI-first startups a top priority. They are actively looking for companies that are built around AI from the ground up, but they are also getting smarter about it. They aren't just throwing money at anything with an AI label. Instead, they are looking for companies with unique proprietary data and intellectual property that can't be easily copied. This focus on defensibility is crucial for building long-term, sustainable businesses in a very competitive field. Of course, we can't forget about the evergreen sectors that continue to attract serious capital. Traditional industries like real estate and infrastructure are seeing a huge influx of investment, growing by 70% year-on-year. Financial services are also on the rise, with investments growing by about 25%. These sectors are the backbone of the economy, and their modernization is creating massive opportunities for investors. Alongside them, other areas like fintech, deep tech, and anything related to electric vehicles and their infrastructure are also getting a lot of attention. The game is becoming more diverse than ever. This diversification is a sign of a maturing market. Investors are spreading their bets across different industries, from the high-tech world of SaaS and generative AI to the tangible world of healthcare. In fact, deal volumes in the healthcare sector saw an impressive 80% increase. This shows a balanced approach. While everyone is excited about the potential of new technologies, there's also a strong belief in the fundamental growth story of India's core industries. It's this mix of futuristic vision and grounded reality that is making the current VC boom so powerful and sustainable. One of the most interesting things about this new wave of investment is how investors are thinking. They are becoming much more selective. It's not a frenzy like we may have seen in the past. Instead, there's a clear trend of more money, fewer deals in certain segments, where larger, more established funds are deploying significant capital into the most promising companies. This means that while the total amount of money is going up, the competition for that funding is getting tougher. Startups really need to have their act together to stand out from the crowd and secure a deal. This increased discipline is also visible in the size of the deals being made. The average size of mega deals, those worth $100 million or more, actually fell by about 20% in 2024. This isn't because investors are getting cheap, it's because they are becoming much stricter about valuations. The days of sky-high valuations without strong fundamentals are over. Investors now demand to see a clear path to profitability and strong unit economics. They want to know that their money is being put to work efficiently and that the business has a solid foundation for sustainable growth. The standards have been raised, especially for early-stage companies. For a startup looking to raise a Series A round, the expectations are much higher than they were a few years ago. Investors now want to see proof of operating leverage, meaning the company can grow its revenue faster than its costs. They are looking for signs of capital efficiency from day one. This means founders need to be incredibly smart about how they spend their money and focus on building a lean, efficient business model right from the start. It's a tougher challenge, but it builds stronger, more resilient companies in the long run. At the same time, we're seeing a fascinating new driver of growth, the public markets. Indian startups raised over $5.3 billion from the stock market in the 2025 financial year. This has become a major source of capital for growth, even surpassing private funding in some cases. The success of recent IPOs has given VCs a clear exit path, which makes them more confident about investing in the first place. When investors can see a realistic way to get their money back with a good return, they are more willing to take risks on new ventures. This connection between private and public markets is creating a powerful, self-sustaining cycle of growth. Looking forward, the future for India's VC landscape looks incredibly positive. The country's strong GDP growth, cooling inflation, and a government that supports pro-investment policies are creating the perfect environment for startups to thrive. All the fundamental building blocks are in place. There's a huge domestic market, a young and talented population, and a growing digital infrastructure. This powerful combination makes India an undeniable hotspot for global capital. Investors from around the world are increasingly redirecting their funds away from other markets and towards the massive opportunity that India presents. However, the journey ahead won't be without its challenges. It's not all smooth sailing. One of the biggest hurdles is the issue of exits. While IPOs have become more common, the overall options for investors to cash out are still somewhat limited. The infrastructure for mergers and acquisitions needs to become more developed to provide another reliable exit route. Another challenge is fundraising itself. While some large domestic funds have raised record amounts of capital, it's still tough for new and emerging fund managers to raise money, which could limit the diversity of investment strategies in the long run. This brings us to the global picture. While things look great within India, investors are still keeping a close eye on what's happening in the rest of the world. Geopolitical tensions and uncertainties in global trade can make investors cautious. No matter how strong a country's domestic story is, it's impossible to be completely isolated from global economic shifts. As a result, investors are likely to remain careful. They will continue to focus on themes like AI and deep tech, and on sectors that are less exposed to the risks of international trade disputes. This cautious optimism will define the investment climate. In the end, the story of India's VC boom is one of resilience, adaptation, and immense potential. The ecosystem has matured. Investors are smarter, founders are more focused, and the opportunities are bigger than ever. The road ahead requires navigating a few bumps, like improving exit options and strengthening the domestic capital base. But the overall direction is clear and exciting. For entrepreneurs with a great idea and the grit to execute, and for investors with the vision to back them, this is an incredible time to be part of India's growth story. The adventure is just getting started.